Good morning. It's Tuesday, December 6th. I'm Joe Elkier, here with my colleague, Damian White. Welcome back to the Gold Spot. Damian, gold has turned in a strong foundation between $1,600 and $1,700, even while this tightening cycle from the Fed and increasing of rates, the most aggressive in 40 years. What does that paint for a picture as far as what we can look for from gold and silver in 2023?
It does look like 16 to 1700, maybe even a little bit higher, 1650, like in that range tends to be support. We've established that over the last couple of years through lots of trials and tribulations of what's been going on financially, economically, geopolitically, and it seems to be holding that level. So I'd be looking for higher prices as we move into the end of this year and into next year and probably beyond. One thing that the Federal Reserve has done recently, about a week and a half ago, was they haven't pivoted, meaning they're going to lower interest rates, but they did say that their aggressiveness in raising interest rates was going to be reduced. So they're going to slow the pace of rate increases. That in and of itself has caused gold to go up $125, $150 in just a short period of time, a week or two. The rates being reduced now could end up being a tailwind, where in the prior couple of years, or especially the last 15 months, the Federal Reserve has been raising rates aggressively. It's a very heavy headwind for precious metals because it makes the dollar stronger. Another element that kind of showed its hands yesterday morning that took everybody by surprise and started a market-wide sell-off in regards to equities was that the Bank of International Settlements, the BIS, which is really the central bank of the central banks, the central bank of the world, and it monitors all the other central banks, came out and said that they'd found $80 trillion of off-balance sheet liabilities from pension funds and other corporations throughout the United States. That's a big problem. No one knew that was there, and when you come up with a number like that, it's quite staggering, really. So $80 trillion of debt that just popped up they didn't know about. So the concerns now become that could that turn into something systemic? The biggest problem that I just read was that in the next year, $64 trillion of that debt has to be refinanced. Okay, now if you look at where interest rates have come from where they were before, you're talking about at a minimum doubling your interest rates for financing, which could cause immediate defaults. So that's something to look out on the horizon. It's not here yet, but it is going to start coming due sometime next year. Towards the end of next year, we could start seeing some problems. That's another element to own gold. If you're going to have a systemic crash, there's paper assets, $80 trillion in debt just found under the mattress, buy some gold, protect your wealth, store of value.
80 trillion. Where are you going to find it? Thanks for stopping by. If you have questions, go to our website, request information, reach out to us. Thanks for stopping by the Gold Spot. We'll see you next week.